morning, everybody. This is Todd Mitchell for Friday, October 10th, and we are going to start looking more at the forex currency pairs. But before I get into the US dollar Japanese yen currency pair, I was completely off mark with what I thought would be a follow through on the Russell and or the the SPYs or SSO or any the S&Ps. So let's look at the SPYs real quick and show you exactly what I was talking about. Right, first I was really off. Obviously, the other day on Wednesday, the market came down, took out October 2nd's low right here, just marginally ran up, closed right up in here, even though we started getting back to some type of a resistance area. I definitely thought we would have had some follow through to the upside. I definitely did not expect the market to completely reverse and close lower on the day, right? So I was completely off on that. So took some small losses on that. Thinking that we would bounce somewhat now. Okay, so and we're down through that today on Friday, right? We're down through that. Now we're testing. We're getting close to testing another major level, which is this low right in here. We're getting close to that level. And this level is right there on the 200. So that's the next level I would watch is this area right in here, the 200 area, okay? In terms of the IWM, I'm still keeping that on my watch list. I still think we could get a nice bounce, but again, we've got a nice downdraft so far today, taking out all of these lows. Let's crunch the chart just a little bit more, see where we're at. We have taken out this low. Let's see if we can go back even further. Let's adjust this down a little bit. So we've taken out these lows. So that's definitely negative. As long as the market closes below the low that was put in place on the 8th, then I think we could continue pushing lower. But at some point here, we are going to get a nice bounce, and I think it's going to surprise a lot of people. Okay, let's look at the US dollar Japanese yen. As you can see, this market had a tremendous run to the upside, a lot of momentum behind that move, and of course the software changed from short-term down right here, which was obviously whipsawed, right, to up on this bar. So as soon as you would see the trend change here, again, red to green right here on this bar. Let me just point this out easier for you here. Right there is when you should have turned your attention to being bullish, okay? So on any reaction, on any pullback, like you got down in here, right between the Kilners, mid to lower, okay, not only mid to lower, which is a nice support area, once the trend changes from down to up, first pullback, mid to lower, look at the day that it actually pulled back into that support area. Look at this bar right here, and I talk about that and teach that. That's what I like to call a bullish blow-off bar, or for those of you that use the terminology candlestick users use, right, that would be the bullish shooting star. And that's basically defined as the open and close in the top quarter, for a bullish scenario that is, open and close in the top quarter. And if you take a look at the range of this bar, it was definitely larger than the prior day bar's range. Maybe not 2 bars prior to that, but all these bars right here bigger. Okay, so we had a flush out right here, and as you can see, the market just started to take off. So now we've pulled down from this high. We're between the mid to the lower, right, near the lower, and we've got an inside setting up. Even though the day's not over, what I would look to do on Sunday night, because that's when the currencies start to open back up, right, I would be looking to buy it up through the high of today, and I'm assuming this is going to remain intact with a stop below these lows. So hope everyone has a good, I hope all of you have a profitable remainder of the day. Have a great weekend, and I'll be back with you on Monday morning. Bye for now.